Good afternoon from Los Angeles. It's Alyssa Corum and Ken Shreve here with a look at the stock market today. And on today's show, we're of course going to break down the market action for you. And we're also going to be looking at a couple of interesting names, including Match, Zoom, and Disney ahead of its earnings report. But first, let's take a look at how the major indexes did today. It was a little bit of a disappointing finish. It looked like maybe we were going to have an upside reversal, but towards the end of the session, gains fading and the Nasdaq actually closing lower about 0.25%. The S&P 500 down about 0.2. Dow closing about flat here on news of weak revenue guidance from Intel falling sharply here.
Yeah, I think that had partly to do with it. But during the final hour of trading, I mean, we actually had pretty decent gains for the Dow, S&P 500, and Nasdaq. But those gains pretty much disappeared by the close. You mentioned weak revenue guidance from Intel, possibly weighing. We've got the China trade talks set to begin tomorrow in Washington, D.C. But yeah, the S&P 500 still holding above the 50-day moving average. So we had the Dow sort of undercut the 50-day line on Tuesday. But so we're still in a confirmed uptrend here. Kind of a disappointing close, but it's really all about China trade talks, and we'll see what comes of it tomorrow and Friday.
Yeah, some heightened uncertainty here. And when it comes to market conditions, we do, of course, look at distribution days. So today, with the lower closes here, it's the volume that might help us avoid the distribution.
Yeah. So volume for the better part of the session have been tracking lower than what we saw on Tuesday. So that's sort of a silver lining. We did get unequivocal distribution Tuesday, big percentage declines in higher volume. So we still have a moderate distribution day count. We are, uptrend is under a bit of pressure here. Again, the Dow, I think at one point it tried to reclaim the 50-day moving average today after giving it up yesterday. But we're still in a confirmed uptrend. It's you don't need to get too bearish. Obviously, the China trade headlines are very fluid. They change almost on a daily basis. So we'll see what tomorrow holds.
That's right. We'll be keeping tabs on those technical levels and the macro indicators as they arise. But let's take a look at a few individual names, starting with Match Group, which had a really great day today, up over 12%. Heavy volume on its earnings report. It had been setting up in a buy range heading into the report. Really strong earnings growth, up 62% for the quarter. I guess the only question is, with the chart looking so good, how do you balance that with what we're seeing in the general market right now?
Yeah, well, I mean, Match Group is extended at this point. It was sort of in buy range ahead of earnings. When the company reported last night, it immediately traded higher, but then the stock actually strengthened more and more today. So it was a very good earnings report. I think the market is really focusing on Tinder growth. They added, I think it was 384,000 paying Tinder subscribers in the quarter. That was accelerating growth from the prior quarter. And so this is a company that seems to be executing pretty well. It is extended now, so you don't want to chase it. A lot of these IPOs have been taking off, and we've been talking about not chasing those as well. But Match Group is extended, so you want to wait for a pullback before considering buying. Right.
I guess if you bought at that initial breakout, or you even used our earnings option strategy, or bought the gap up early, depending on where you got in, different ways to handle this. But overall market conditions, a little bit of a concern at this point.
Yeah, again, we had heavy distribution in the market on Tuesday, and not such a great close for the indexes today. So we're starting to get some whiffs of institutional selling in the major stock indexes. But we've been kind of pounding the drum on a lot of leading growth stocks that are really still.
That's true.
Still,
here you go, Match.
Still holding up well. Match doing well, and ServiceNow. There's a whole bunch of them out there, really not under any duress at all. So we're still optimistic here, but we have to see how things shake out.
Exactly. Well, flipping over, speaking of IPOs, it's been a big year for IPOs, and this week, buzz about Uber's listing coming out soon, and we want to take a look at a recent IPO, Zoom, because it's important to reiterate to our audience that you don't want to be buying these IPOs on the first day of trade. It's important to wait for an IPO base. Zoom did form an IPO base.
Yes, it did. It was a very, very short IPO base, but the buy point was 74.27. It was a nice breakout when the stock crossed the $80 level. It had a rough day yesterday. It was down about 6%. A lot of growth stocks sold off Tuesday, but it's good to see Zoom Video rebound today, close near session highs, even with the broad market bleeding late. So yeah, Zoom is still above a entry point here, still in buy range. It's been a very vibrant IPO market, and of course we've got Uber set to price Thursday night. They'll start trading Friday, so we'll see how that one goes.
Exactly, very exciting. And one other thing to note about Zoom's chart, if you tuned into our Investing with IBD podcast episode on IPOs, we talked about Zoom and how the IPO base can be a lot shorter than your standard base, but the shorter they are, potentially the more risky and the more volatile they can be.
Yeah, I mean, anytime a stock forms an IPO base, you're really just looking for an opportunity to get in. So sometimes a stock will come public and it may consolidate for 3, 4, 5 days. This is where, we're used to seeing bases that form over several weeks time. But, Zoom Video's IPO base was really several days, and it just gave a good, broke out to new highs. It was just a great IPO base breakout, and good to see the stock back above the buy point.
That's right. So for Uber coming out later this week, remember, don't buy into the hype. Wait for that IPO base.
Yeah, you don't want to get caught in a lift situation.
Yeah, exactly.
They had earnings today, and it was big sales growth again, but they're still losing a lot of money. So the stock was down sharply today.
And hitting their lowest level ever today.
Yeah. And
all-time lows.
There's kind of discussion that Uber's pricing Thursday night may not be at the high end. They're going to have to price it accordingly to spur demand. So we'll see what that IPO looks like.
That's right. And overall market conditions not the best. They're been a little bit more volatile this week.
Yep.
But let's finish off the conversation with a look at Disney ahead of its quarterly report, rising 1.2% today, and it's been able to extend its gains after a gap up out of a base.
Yeah, so that gap up was on April 12th. That's when Disney unveiled their video streaming service, which the market...
Disney Plus.
Disney Plus, and a lot of analysts, they said it was actually a lot more robust than they thought it would be. So, but Disney has been holding gains nicely, and haven't seen what the stock is doing after hours, but they did report earnings, and it's been holding gains after that gap up, and it's really been a really powerful stock in the Dow.
That's right. Always good to keep an eye on these stocks to see how they do after they gap up. Can they hold or even extend their gains? It's always a good thing. And it looks like Disney shares up about 1.5% in after hours trade. So positive sentiment early on this report.
Positive sentiment early, and really the headlines around this company have been positive for some time now. Of course, Avengers, the Endgame movie, fastest movie ever to $2 billion. So a lot of good stuff going on at Disney right now.
All right. Thanks so much for watching, everyone. We hope you check out investors.com for all the latest stock market news and analysis. And we also have another Investing with IBD podcast episode dropping tomorrow. It's going to be all about taking profits. So, with this uptrend that we've seen and a lot of big gains and, maybe some pullbacks happening, helpful to learn how to take profits and those key strategies around that.
When the market goes from being in a confirmed uptrend to an uptrend under pressure due to signs of institutional selling, it's really the time to start playing defense. You don't need to sell all your stocks. You want to hold on to your winners, give those as much room as possible to work. But when it comes to laggards or stocks that just aren't working very well after you bought them, don't be afraid to cut them loose.
Great advice. All right, everyone. You can head to investors.com/podcast for the latest and how to subscribe to get that when it drops tomorrow. Thanks so much for watching, and we'll see you right back here tomorrow.